Warm regards to our viewers and welcome back to Bulletin Bites, latest news on law, tax and business in India for Q2. We are convinced that the updates from Q1 were informative, useful and educative. In this quarter, we will take you through the various updates that materialized and those which would transpire in months to occur. To begin with, I would like to announce our latest development as official knowledge partner to the Make in India Mittelstand program for the year 2022. Rödl Partner is now your first point of contact to set foot in the Indian market right from the start. From facilitation of approval and clearances from central and state agencies, boosting investments, localization and much more. It's time to expand your business and open new horizons with India, which is the fastest growing economy. Whether you're a technology, engineering or manufacturing company, Rödl Partner is here to facilitate you to grow your business. Moving on to the service line-wise updates. Starting with company law updates, the most relevant update for you is that the special permission for companies to conduct the annual general meetings and the extraordinary general meetings through video conferences has been extended till 31st of December 2022. Considering the sensitivity of data, we appreciate that the Ministry of Corporate Affairs has removed the requirement for companies to disclose in their statutory registers and annual returns sensitive information like email ID, PAN, registered address and unique identification number. Dear viewers, the Ministry of Corporate Affairs has introduced several requirements for submission of declarations regarding compliance with governmental approvals. It is very important to highlight here, especially for companies who have investments, mergers or similar transactions planned with companies or investors from neighboring countries of India. This is in spirit of controlling investments from China, including Hong Kong, to India, as many Asian investment structures are routed via China and Hong Kong. This update may be of relevance to you. Even stricter is now the requirement for obtaining security clearance from the Home Ministry of any national from a neighboring country who is supposed to be appointed as a director in an Indian company. Moving on to labor law updates. Due to latest changes, shops and more important commercial establishments can now operate 24/7 for the next 3 years. However, please note that there are a couple of compliances that have to be fulfilled in order to have a 24/7 operation. This is applicable to companies with more than 10 employees and surely of relevance for companies who operate in shifts to provide global delivery requirements. We are happy to inform you that the government had reduced the burden of reviewing the labor compliances for contract laborers. This used to be in the past a heavy burden and high risk for companies who were engaging contractual laborers. Further, the online platform has been made mandatory to ensure remaining supervision. However, we would like to highlight that in the spirit of the German Supply Chain Act, the companies shall not lapse in supervision in maintenance of labor law compliances for contract laborers. Dear viewers, we would now inform you about some of the key changes under the customs and GST regulations. The GST Council met last month and decided to change GST rates of certain goods and services to avoid issues for companies whose GST liability is less than GST paid on purchases. Very importantly, this also changed the formula for approving refund in such cases by allowing refund of taxes paid on input services. Separately, following the guidelines of Supreme Court, the COVID-19 period, which is from 1st of March 2020 to 28th of February 2022, has been proposed to be excluded for the purpose of calculating the period of limitation for filing refund applications or issuance of demands by authorities. At the same time, considering various complaints from industry on recovery proceedings during an investigation, the authorities have been instructed by officers not to initiate such recoveries during the time when such investigations are still pending. On the customs side, the HSN classification of goods which underwent changes in the year 2022 have been implemented from May 2022. This requires companies to check whether they are still using the correct HSN codes for their import of goods. Secondly, the exemption from payment of GST on import of goods under various export promotion schemes under the foreign trade policy is granted perpetually in the interest of clarity for manufacturer exporters. It is also important to note that one of the eagerly awaited free trade agreement between India and UAE has been executed. This will ensure free trade between the two countries and also strengthen the trade ties. Let us move on to the direct tax updates. The compliance burden has been on rise for corporates every year. In particular, TDS and TCS provisions are subject to constant changes. This year too, the government introduced in the Finance Act 2022 a new provision, 194R, under which the TDS would now be applicable on non-monetary benefits and perquisites arising in business. For example, TDS will now apply to gifts, trips, etc. to sales partners. The governing body for direct tax has recently issued a circular clarifying some issues in implementing TDS on benefits or perquisites, barring certain open issues. Let us draw your attention now to some interesting direct tax rulings by Indian courts. The reassessment provisions were completely changed in the budget of 2022. However, the Supreme Court has ruled that notices issued under the old provisions continue to remain valid, irrespective of the new law. The practical impact of this may not be so high. However, from a jurisdictional point of view, we see it as a very bold move of the Supreme Court. We hope that such bold steps favoring the Revenue Department are not a new trend of the Supreme Court. We would like to conclude our direct tax updates with a quick view into the international tax developments. We are happy to see that the Delhi High Court has ruled in favor of applying the beneficial tax rate of 5% under the Double Taxation Avoidance Treaty for India and Switzerland. Our newsletter contains a detailed analysis of this ruling. In another mentioning worth decision of a lower tax rate, the interest payouts by the Indian branch office to its headquarters was held as non-taxable, as it was seen as one entity. We will keep you updated on the further development on these rulings, as from our point of view, correct decisions are under further litigation. The last section of our newsletter covers the BPO highlights. In our bulletin this time, we have focused on the importance of correct distinction between pre- and post-incorporation expenses. This is of high complexity and is often overlooked by the investors and their Indian management. Unlike in other jurisdictions, the foreign investment into India is highly regulated and full of potentially severe traps. Furthermore, it has various implications on the foreign jurisdiction of the investor. Therefore, we urge you to pay good attention to this interesting and relevant topic. Dear viewers, with this, we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.